Good afternoon, and my name is Amy Bach. I am the co-founder and executive director of United Policyholders, and I am very pleased to be joined today by two top experts, Phil Irwin, an independent insurance agent, who boldly and generously agreed to also, in addition to running his insurance agency and serving his clients, be a representative of the California FAIR Plan. So he is here as our expert on the FAIR Plan. I'm also joined today by Joel Loucher, a senior advisor to the California Department of Insurance. Joel is a long time insurance regulator. He, for many years, was in charge of the rating division, so he is very familiar with the process through which insurance companies price your policies. The topic we're going to be talking about today is a serious one. It's a very challenging one for thousands of Californians today, the California home insurance crisis. So we are here to give pragmatic guidance on keeping your home protected when options are limited. And the topics we're going to be covering today are certainly near and dear to a lot of people's pocketbooks. And we know that when you use the word crisis, it's a loaded word, and it took us a while to feel comfortable using that. We were hoping we wouldn't have to use that term, but that is what it is. So just a little bit about our organization. We were founded in 1991 in California. We are operating nationwide. We're a nonprofit source of information and advocacy. We have expertise in insurance, buying, claims, and legal. We are supported by donors, grants, and volunteers. We're a respected voice for insurance consumers in courts, legislatures, and public policy forums. We are also a trusted source for the media. We run 3 programs: the Roadmap to Recovery, through which we help people and businesses solve insurance problems that can arise after disasters. Right now, as we speak, United Policyholders has representatives at the various assistance centers that have been set up for the California wildfires. So we are on the ground and we'll be bringing recovery guidance in those regions over the next couple of years. We also run a Roadmap to Preparedness. The program that I'm bringing you today is through that program. It's educational. It is helping people and businesses be disaster prepared and shop wisely for insurance to protect their assets. That's the challenge that we're going to be talking about today. We also do quite a bit of advocacy and work, meaning representing the interests of policyholders in courts of law, legislative, and forums, as I said earlier. And the issues we're talking about today require us to be engaged on through all of our programs in order to help restore a marketplace in California where homeowners can find and keep affordable, decent quality protection on their homes. Just a quick reminder, we're part of Listo's campaign with partners all throughout the state, banded together to promote resiliency in the face of the many disasters that Californians face. So what are the 5 essential steps? Get alerts to know what to do, on your phone, subscribe to your local Nixle, what have you. Make a plan to protect your people, pack a go bag with things you need, build a stay box for when you can't leave, help friends and neighbors get ready. What's our message? Be prepared, not scared. That's why we're here. Our organization's focus is helping you buy the right kind and amount of insurance. We use the phrase insure to value. That means having enough insurance to match the value of your assets, and know your stuff, have some records of your stuff. And by that we mean inventory. And the most important thing is, the simplest thing is to use your smartphone to create an inventory by walking around your house inside and out, narrating as you go. Here's the bedroom set I inherited from my aunt. Here's the couch I bought at Macy's 5 years ago. Anything like that that you can remember. And then again, send that video file to a place where you'll be able to find it. Scanning important documents and storing them off-site. And then, very important to today's topic, take steps to harden your home. That's a term that describes make your home stronger and less vulnerable to being damaged in a natural disaster, and create defensible space. So of course, by now, and if you've dialed in, you know all about what that means. Creating a brush, plant, tree-free area around the perimeter of your house to allow firefighters to save your house if there is a nearby fire. And then those other 3 items: installing vent screens on your attic vents, as I said, clearing brush and debris, and then installing fire retardant materials as much as you can afford. So we've given you a link there to low cost and no cost techniques that you can use. So obviously you don't need me to tell you you're here today using your Thursday afternoon to talk about everyone's favorite subject, insurance, because home insurance for many Californians has become very hard to find and expensive, as we know, in what are called WUI areas, wildland urban interface regions, and also in some suburban regions. So not just out in the country, not just in the rural areas, but also in a lot of our suburban areas. Homeowners are being non-renewed, dropped by companies they've been with for years. Name brand insurers are not an option for many people. And there are some unknown brands, and they may be okay if they're financially strong. UP is working with partners to fix the problem and providing shopping help on the limited available options. And some of the partners that we're working with are my guests on today's webinar. So the Department of Insurance is a partner, the Fair Plan is a partner, many of the independent agents and brokers around the state are partners, and of course, the many amazing community leaders that are working on programs in their areas, and firefighting professionals, fire safe councils, all of these partners, we are working together to try to solve this problem. Because obviously if you have a mortgage, you've got to maintain insurance, you're between a rock and a hard place. The good news, bad news, good news, coverage through the California Fair Plan is available for almost all of you that have dialed in today. In most situations, that will be your last resort if you cannot find insurance through the private market. That's the good news. The bad news is it's not going to be cheap. And that's just the reality that we are all navigating today. How is UP helping? Through education, like this, webinars like this, and the partnerships I mentioned, and advocacy at the state and the national level. And so the challenges that we are experiencing here in California are very similar to challenges that people have been going through in Gulf Coast states, and where and on coastal areas where home insurance suddenly, after some bad weather years, became so expensive that it was just a huge burden on households, and became even sort of a social justice issue for a lot of low-income communities. The escalating cost of home insurance. And so this is not just a California problem. It's also a problem in lots of other areas, including Colorado. Okay, what are we doing about it? We've got a policy initiative called the WRAP Project, Wildfire Risk Reduction. I don't want to go into too much more detail because I know people want to get right to the meat of where do I get insurance and how. But just to let everybody know that in order to keep this a temporary problem, the availability and affordability situation, we've got to really work at a policy level. And so I'm going to put a few concepts forward today for everybody who's listening to really think about and participate in. What is this initiative? It's a coalition. And what are we doing? We're working to set standards for risk reduction that insurers will accept and reward. Because right now, we know insurers are running scared of the market. They're afraid of climate change. They're afraid of the wildfires. And so they're looking to be more on the sidelines right now in California. Our feeling is one way to remedy that is to reduce the underlying risk through a statewide program where there is one set of standards that everybody adheres to, and if a house adheres to them, then their insurer must give them some sort of recognition. By reducing by getting more and more people involved in fortifying homes and making it easier for homeowners to take steps to reduce their risk, we are hoping that we will improve the overall health of the market, and that will help bring insurers back. We want to incentivize homeowners to proactively reduce wildfire risk by making it easier for them to keep their homes insured. And our goal, as I said, we want to restore home insurance availability and affordability, or strengthen the FAIR plan so it's a better option. If the private market doesn't come back because of long-term concerns about climate change, then we have the FAIR plan, and we're just going to keep making it as strong as we can. So that's the WRAP program. Just a few little bits of terminology here so we're all on the same page. When I talk about dropped, that's the same as non-renewed. Your insurance company decides they no longer want you as a customer when your current contract expires. There's another term that you need to become familiar with to navigate this situation is difference in conditions. That is a label for an insurance product. It can be a difference in conditions policy, sort of a standalone contract, or it can be a rider, a couple paragraphs or so that get attached to a policy. So, but a difference in conditions policy, think of it as a supplement, an add-on that fills gaps in a FAIR plan policy, what that policy covers. And we're going to explain what the FAIR plan is about in a few minutes, but just understand FAIR plan, insurer of last resort, limited coverage, pair it with a DIC, and you basically get a similar amount of coverage as you would get in a regular old homeowner's policy. Then another phrase you need to be familiar with to navigate this, admitted versus non-admitted. Those are two kinds of insurance companies. Admitted is fully regulated, non-admitted is more lightly regulated. Many of the unfamiliar brands of home insurance that you're going to hear mentioned today are non-admitted, okay? We're going to explain why that matters a little later. The main reason it should matter to you is if a insurance company is fully regulated, that means that Joel's agency, Insurance Commissioner Lara and his team out of Sacramento, LA, and San Francisco with all their offices, they're keeping an eye on that company's books and making sure that they have enough money to pay the claims for all the customers that they have sold policies to. A non-admitted, they can't look as closely at them. So there's a little bit more burden on you as the consumer when you're shopping to make sure that that non-admitted company is financially strong enough so that you don't get left holding the bag. Why? Because sometimes, happens and we get some, for example, the Camp Fire, where 18,000 structures get destroyed in a matter of days. One insurance company just had too many customers in that area and could not meet their obligations. But because they were admitted, fully regulated, their customers were not left hanging out to dry when they ran out of money, because there's something called the California Guarantee Association, and that we call it CIGA, and that was there for the customers of that one insurer, Merced, that ran out of money. CIGA came and backed them up, and people still got paid some money for their losses. But if Merced had been a non-admitted insurance company, there would not have been any CIGA to pay those claims. And that is obviously a situation you want to avoid. What are your rights if you're dropped in California? Well, the law just gave you a little bit more rights as of July. It used to be that the insurer only had to give you a month and a half advance notice. Now they have to give you 2.5 months notice, 75 days before your policy is going to expire. So that's very helpful now, because shopping is just not as easy as it used to be. It's what we would call a seller's market. You as the buyer are scrambling, and because your options aren't as many as you used to have. So you may need every one of those 75 days. There are some special protections that I'm going to mention now. I'll mention them one more time. If you live in a wildfire adjacent zip code, your insurer has to renew you for 1 year when your policy comes up for renewal after the fire. And if your home was damaged by a wildfire, you get 2 extra years before you have to worry about shopping and scrambling. Your insurer has to hold on to you as a customer for 2 years if your house has been damaged, or for 1 year if your house was near a wildfire, a declared disaster. But, you know, and this is really kind of the ultimate bad news. If your insurer gives you the legally required 75 days notice, and they're not discriminating against you, meaning, you know, discriminating against you because you're, you know, your ethnicity or your age or your gender, they are free to drop you. United Policyholders has been developing as much help as we can to share with you, the public. We have publications. The best place to start is at our website, uphelp.org/dropped. That will take you to the section. I already mentioned this. I want to mention it again, that if you have had a total loss, your insurer can't drop you for 24 months. If your home is in or next to a zip code where a state of emergency has been declared, they can't drop you for 12 months. And that I've given you the code section if you need that. So obviously there were wildfires in 2019, 2018, 2017, and 2016. That's why we are in this situation. But because your lawmakers are trying to protect you, there are those 2 rights we gave that I mentioned earlier. So it's the 75 days notice. It's the 1 year if you live next to or in a wildfire zip code, and then the 2 years if you're affected by the wildfire. Last year, there were wildfires. They weren't as big in the headlines, but there were some disasters declared, and so there were a number of areas that were protected from getting non-renewed. You can go to our website, or you can go to the Department of Insurance to see where you live, whether your zip code is subject to any kind of a moratorium on home insurance non-renewals. Obviously right now, this year, we've got the 2020 lightning complex wildfire regions where homes have been destroyed. So all those regions will get some relief, temporary relief, either 1 year or 2 years, depending on the extent of the damage. And I've listed all the communities, or not all of them, but the major communities that where the Governor Newsom's disaster declaration that he obtained from the federal government will protect somewhat against non-renewals. So where do you go for help? You can go to an insurance agent. There are basically 2 kinds of insurance agents. There are independent agents, and they have relationships with multiple insurance companies, Safeco, Travelers, etc. Or the other kind is what's called a captive agent, meaning they can only sell you Allstate, State Farm, Farmers. So those are 2 different kinds of agents. In today's market, an independent agent is much more likely to be able to help you, because the companies that sell through captive agents, the names I just mentioned, those name brands, were among the first. They're the biggest, and they were among the first to really start non-renewing large groups of customers. They're very, very picky, even the pickiest, I'd say. So, we recommend using an independent agent. Phil is an independent agent. That's why I had him on today. There's another tool you can use. Our organization has partnered with a B Corporation. That's a socially responsible form of corporation called Yapacopia. And they're supposed to make money doing good, which is fine, good. So Yapacopia has a service. It's a network of independent agents that are beating the bushes looking for policies to put people with. So you can try filling out the form, follow that link, and see if you get some help there. And then the California Department of Insurance website, which is a very good source of shopping help. And when Joel gets his chance to speak, he will give you more details about that. I want to give a little shout out to 5 insurance agents that are special to me, to us, because obviously insurance agents they serve 2 masters, right? They're responsible to the insurance companies that pay their commissions, and then they are responsible to the customers that provide the premium payments from which those commissions get taken. They obviously, they're in the middle. They want to stay as diplomatic as they can. And, United Policyholders is a consumer group. And so, not every agent or broker is willing to share information with us. But the ones that do are, to me, sort of angels, because, they help us be informed so that we can turn around and help you. So I just want to give them a special thank you because of that. So if you want to take a picture of this slide, if you want to email any of these gentlemen, none of them have magic wands. I don't have a magic wand, but they know where to look for coverage in today's market, and they have been navigating. And if you talk to insurance agents today, they're not happy. This is obviously, it's very hard on you as a homeowner, but it's also very hard on them. But there are some very good consumer-oriented agent brokers out there, and those are some of them. If you have been dropped and you can take a few minutes, we have an open survey going on our website. It only will take you a few minutes. We don't sell or share our mailing lists. We will keep your answers confidential, but we want to hear from you. We're gathering data all the time. And the data that we're gathering helps us be your voice in the media, with the insurance commissioner's office, and to really know what's going on and be able to translate it into plain talk for you, the consumer. These are just some of the companies right now that are selling insurance and home insurance, according to our last interim survey results poll. You can see that the FAIR plan has a big chunk of the market. That doesn't necessarily mean that's the whole market. Those are all the people that have been having trouble getting insurance. So I think the FAIR plan doesn't have quite that much of the California market, but they're getting there. Okay. So what is my organization hearing from those wonderful 5 guys whose emails I gave you, and some of our other sources? We're hearing about some names that you may never have heard of. So I just want to mention those in case you're working with an agent who's not familiar with all these companies. And none of this is an assurance. These are just names for you to look into. Guard, Allied, Bigfoot, Lloyd's, Lexington, Heritage. If you're insured with State Farm and you're just worrying, you really should just, there's no point in worrying. If they non-renew you, that will happen, but their situation has been somewhat in flux. They have not dropped as many people as some other companies, but they are not writing new policies. And again, you can see by these notes, pricey, getting pickier, and Lexington will write under certain conditions, based on your brush clearance and your road width. And I just want to say again that, the situation is changing. So I talked to an agent one week and he'll say, I couldn't get Pacific Specialty to take anybody this week. And then the next week he might say, they actually picked a few people up. And that's because insurance companies are making business decisions on an ongoing basis. And so you may get a no one week, but you may get a yes another week. And that's why all of us, myself, Phil Irwin, and Joel, will tell you that the best thing you can do is keep shopping. And I know that's really not great news to hear. Like, I love shopping for insurance and stressing out. No, nobody does. But it is, because it's a seller's market, you got to be tenacious. You got to be, you got to stay on it. So if you go with a non-admitted, one of these companies that's not protected by that SIGA backstop, that bankruptcy backstop, how can you tell if they're financially strong? You can call this toll-free number, which is a company called AM Best. They're one of 5 companies that rate insurers, but I had no problem getting them on the phone. A human being, I love when that happens. And they will, if you give them the name of the company you're looking for, and you have to, they will want you to register their website, but again, it doesn't cost any money. So that's a good thing. UP offers an excellent tip on buying insurance through the FAIR Plan, the lowdown from up. Phil actually helped review the publication, and we're very proud of it. It's pretty good and comprehensive, and you can find it on our site. And so now I'm gonna turn the program over to Joel Loucher, a senior advisor with the California Department of Insurance. Joel and I have done a lot of work together over the years, starting back in, I think in the Prop 103 days. So Joel, I really do appreciate you putting in the time today to help. And I know how familiar you are with this crisis and all the work that you and your colleagues at the department have been doing to try to make it better, make it go away. So Joel, take it away.
All right. Thank you, Amy. I'm thankful for being here. And my main point, of course, is just to make people aware of the Department of Insurance as a resource that they can use. On our first slide here, you see our 800 number. Monday through Friday, we have a consumer services staff that will take your calls, answer your questions on an array of matters, from finding insurance to claims issues to whatever comes up insurance-wise. Today, I'm going to walk you a little bit through some of our website, and you can see the address there, insurance.ca.gov. But if we could go to the next slide. One thing, thank you. Did I say my compliments to United Policyholders first for all the work they do? I got to throw that out there before I move on down here. Because as Amy mentioned, I've worked with her many times. And it's because United Policyholders is out there at so many disaster sites, dealing with claimants and people with questions well into the night, sometimes helping people out. And it's really an incredible service that they provide. So again, before I get going, thank you, Amy, for all your group does at United Policyholders.
Well, thank you, Joel. And having an insurance regulatory department that really works as hard as yours does is it's a blessing that consumers in other states don't have, that people in California have.
Okay, well, thank you. Well, my first recommendation on this path of shopping is to take the easiest course first, of course, which is shopping local. Who is writing business in your neighborhood may be apparent by who's covering your neighbors' homes. So the Nextdoor app is a very common app that people use today, and I have seen many times insurers or people saying, I've been dropped by my insurer, non-renewed, and who's writing coverage around here and around our hometown. Well, as it turns out, sometimes there are agents on that Nextdoor app also using it as an opportunity to seek business. I'm available if you want to give me a call. So there are independents, and actually in my particular area in Contra Costa County, I know there's a State Farm agent who comes on frequently, and State Farm still is writing new business in my neighborhood. But check with friends and neighbors or whoever nearby, easy, and check that Nextdoor app to see if you can find coverage, because, you get a little more insight into the agents, and it's kind of an easy path. Though, on the flip side, just because an insurer writes in your neighborhood doesn't mean they necessarily want to write more homes. No insurer today is looking to have a concentration of homes in any one vicinity, subject to a single wildfire. So they're all more cautious of that today. But here's the starting point. So next point is come to the Department of Insurance. And so the next slide, there's our web address again, insurance.ca.gov. You come onto our homepage, and this, I'm just going to go over a couple slides on how to navigate it. There's a consumers tab there that you'll see. You choose type of insurance, right? You're looking for homeowners insurance. So next slide. And when you get to homeowners insurance, or you want to choose homeowner residential button there. And next slide. Under types of insurance, excuse me. So we try to give you a lot of options and a lot of tools to help you shop for insurance. A lot of options are there on information about insurers and agents and ways to find coverage. But I will say, despite all this information, and to Amy's point, it's still going to be a challenge. But so let's start. Next slide, please. Among those, oops, I think we missed one. Did we miss one? Yes. No?
Which one?
Okay, try one more slide.
This one?
No. I thought I had a top 10 tips. In any case, one of those options when you go to it is the top 10 tips. I think maybe it's on the previous slide back. Our top 10 tips are kind of a, we'll go forward.
Sorry.
One more.
I'm pretty dizzy here.
Yeah, I don't know. It disappeared.
All right.
Yeah, it's gone. Anyway, our top 10 tips kind of gives you an overview of all the tools that we do have, and tells you a little bit about, how to get in touch with a surplus lines insurer, how to compare premiums at different insurers. I think the main two of assistance that you'd find right now on that are listed on those top 10 tips are our home insurance finder tool and our list of homeowners insurer contact numbers. Essentially, what you're setting out to do is to scour the entire homeowners marketplace to find, that one insurer, maybe more, that's willing to write your policy. And I will say that one of my former coworkers at the department, who's an attorney and very much knows his insurance coverages, he lost his coverage. He did use our tools. He used our home insurance finder and our list of 800 numbers. Our home insurance finder lets you sort to identify insurers that are writing in the higher risk fire areas, at least indicate that they are writing there. You'll find out that they're not writing everywhere in those areas. But he used our 800 number and contacted every single one of those companies that was indicated that they were writing coverage. And he shared that he spent days on this effort, and sometimes, called both the company directly and then agents of the company. And it was quite an endeavor. So my apologies in advance for anybody that has to go through that. As Amy mentioned, people generally don't love shopping for homeowners coverage, but the key is to really have a checklist of who you're calling and what coverages you are asking for. So, right, you want to have a template. So if you get beyond the yes or no to a yes with any carriers, you want to be asking them for the exact same coverages so you can make a comparison. in the best of worlds, you're going to have a choice, and you'd want to make sure you're comparing apples to apples. But, you know, one of the issues is that you are trying to place your most difficult coverage. And so one of the pieces of advice that isn't on our website is advice to help you sell yourself to the agent. Many homeowners actually have several policies, and you may get an agent a little more motivated to act. Not that they aren't all hyper motivated, but they may be willing to try a little harder to place your homeowner's policy. If you say, you know, whatever agent places my homeowner's policy, I'm going to move all my coverages to that agency. And I have an auto policy and an umbrella and an earthquake coverage, and maybe you have a jewelry floater for your wedding ring, or whatever you have to offer. You know, do your own best sales pitch, right? You're your own agent in this endeavor to try to motivate whoever you're talking to do their best on your behalf. And no matter who you're talking to, agent or company wise, you know, you want to sell your best features, which hopefully means you've had 0 losses on your homeowner's insurance, and you have a well-maintained property. So to another of Amy's points, you know, before you get out and do all this effort to find a homeowner's insurer, you want to get your property in the best condition that you can possibly make it or afford to make it. Because if you do get a company that will consider you, they may want to send an inspector. And you want that inspection to be, you know, your best face forward in terms of getting that coverage, and not miss your opportunity to place your coverage because you held back on, you know, trimming some of your shrubbery, or did the kind of the less expensive things. For example, those vents, again, Amy mentioned, that circle the perimeter typically of your foundation. It's not necessarily a super cheap fix because they can run 20 or 30 or 40 each, and you may find you have 20 of those vents all the way around your home, and so it adds up to a few $100. But in the course of things, you know, you've not only protected your property from ember flow, which is the essential thing you want to do, is not have a fire, but you may have helped yourself find an insurer and have another selling point that shows what kind of property owner you are, that you just replaced all your vents. And if you're going to move all your coverages, of course, you would also want to sell your driving record, which hopefully is also a clean record and a well-maintained car. So next slide, please. So I'm repeating a lot of what Amy said, and ultimately because it's so important. And just an update on those admitted insurers and why it's so important. An admitted insurer, if they were to go insolvent, which is very, very infrequent, there is that guarantee association backstop that will pay claims on homeowners coverage if the insurer goes insolvent. The amount of coverage under that guarantee association is up to $1 million on the dwelling and $500,000 each for your additional living expense and your contents and your other structures. So it's a significant backstop for most homeowners that would pretty much satisfy their needs. But so it's very important. The FAIR plan, if you do end up with the FAIR plan, does have a backstop itself. It's not SIGA, but the FAIR plan has the ability to assess all the admitted insurers in the homeowners market if for any reason the FAIR plan's losses exceeded its surplus. So the FAIR plan is itself very financially secure, right? They have a great backstop of the whole industry. So again, the surplus lines market is the one that has the least oversight and the least amount or no amount of backstop, actually. You find that most insurers doing business in the surplus line market have been regulated by an insurer somewhere. They might be what we call a foreign insurer. That just means their license or home office is in another state, or alien insurer. That means they're from another country. But typically there is a regulator involved and some oversight. Your surplus lines broker is a part of their role is to find you coverage with a reputable surplus lines company. So you do have to put some faith in the broker as well. And there are two places where you can see lists of those surplus lines insurers that get at least the most oversight that or regulatory review that any surplus lines insurer gets. One is the what's called the Lastly list, and the other is often referred to as the IID list. And if you could go the next slide, please. The Lastly list is the list of approved surplus lines insurers. So these have had some decent regulatory scrutiny. That list is on the Department of Insurance website. So if you do get an offer with a surplus lines insurer, it should be more comforting if they are on this website because they do get more scrutiny. The other one, for the next slide, please. The other one is the IID list, as it's referred to, which is the International Insurers Department, which is part of the National Association of Insurance Commissioners. So a lot of acronyms there, but they have a quarterly listing of these alien insurers, which in insurance lingo doesn't mean they're from another planet. It just means they're from another country. And those insurers have received some level of significant vetting as well. Okay, next slide. So, we're going to move in just a second to Phil, and that's because he's kind of the last speaker because the FAIR plan's our last resort. And, but, you want to be careful. And maybe Phil's going to go over this. The FAIR plan does have a very good website. It does have a coverage comparison chart that does a very good job of illustrating the difference between a FAIR plan fire policy and a homeowner's, which a comprehensive policy, multiple peril policy is a homeowner's policy. FAIR plan fire policy much more limited. And that's why we always mention, and Amy mentioned, the difference in conditions policy that matches up with a FAIR plan to give you a more complete homeowners-like coverage. But whatever insurer you choose, whether it is, or whatever insurer that you can find that will write your home, your key is always to buy enough coverage to rebuild your home. And the issue that the department has dealt with in wildfire after wildfire, in the results for homeowners that have lost their homes, and United Policyholders has dealt with this so many times as well, is that people are underinsured and will not get enough proceeds from their insurance company to rebuild their home. And there are approximately 8 million insured homes in California. The odds of your home burning down are infinitesimal, tiny. It will almost surely not happen, but that is the reality for all the people whose homes did burn down as well. There was almost no chance of it happening, and yet it did. And that does happen, unfortunately, to thousands of Californians every year. So don't assume it's all about saving money. It is about making sure the product will perform the way you need it, when you need it. And that means getting full limits to rebuild your home. It's just the most important part of the coverage. And again, insurance.ca.gov, 800-927-4357. We don't have people behind me on the phone acting like they're taking calls, but please feel free to use the Department of Insurance because we are free to use. So thank you, Amy.
And thank you so much, Joel. And now we're gonna hear from Phil, who, as I mentioned earlier, has two roles here. He is an insurance professional who is licensed to sell insurance, and he is also a spokesperson for the FAIR plan. And you heard me talk about it as good news that it's there, but that you also heard Joel say it's the last resort, and we try to be apolitical at UP. So, agnostic, is government the better provider of insurance, or the private industry? We're not even here to talk about that. We're here to talk about how to get you out of this jam that many of you are in. So Phil is going to give some of that information. Phil, thank you so much for being with us today.
Thank you, Amy.
Phil's an independent insurance agent based in El Dorado Hills, outside of Sacramento. And he has been assisting the California FAIR Plan as a spokesperson. Phil shares a recognition that I came to a number of years ago, that the FAIR Plan probably needs a lot more resources to do its job, but it does what it can with what it has. So Phil, take it away.
Well, I appreciate that. And one of the words you used as you kick things off is you use the word crisis. And, I think it's a good word, because to me, it just shows sense of urgency. And I think everyone that's involved at every level sees this as an urgent matter. I mean, there's a lot going on in this state that could probably share that term. But, I know very well that people that live in this community and are in these communities and are impacted by these issues, it is urgent. They don't want to see it. They want to see some better alternatives come about, and there are a lot of dynamics to it, and I'm here representing the FAIR Plan because as an agent previously or currently, and in my role, I saw the FAIR Plan of all the components involved as really one that was stepping up and really filling the gap, filling their role, and open to adjust if needed, and that's something that I've just seen consistently. And again, I'm proud to represent the FAIR Plan as a representative, but also as an agent. When I talk to my customers, even if we do get to that point of last resort, I'm confident that if something does happen, it's going to be the right coverage for them given the circumstances. So I'm just going to go into my slides right now, and I just want to also note that I'm probably not going to have a chance to get to too many of the questions, but they are all very important to me. So I want to make sure that everyone has, before we close out, everyone has my phone number to call me directly, as well as my email, because again, every question on there is something that is important, and they're not quick answers. I want to have a discussion, and if there is something that, we are open to feedback, and also open to help provide clarification. And if it's technical, we can get underwriting involved. But if it's something that I can just work with you, I definitely want to take the time to do that. So I want to make sure that we get that information out, because again, your questions are very important to us. So
Phil, I want to share with the audience that you may well be the hardest working guy in the insurance business. And you said your day started at 4:30, so that explains why you're willing to put your phone number out there, your email address out there to answer questions. So thank you very much.
I appreciate it. It's my pleasure. It's what we're here to do today. So the FAIR Plan is new to some people, and was to me 2 years ago. But it's basically an association comprised of all insurers licensed to write property insurance in California. It's a small organization with less than 90 employees. Actually, a year ago, there was just 50 employees. So you think about that, it's really not this mega corporation that or entity that you know we might envision as we've seen with some of the other insurance carriers out there. It's got its own employees and are overseen by a governing board that includes the California Insurance Commissioner and also insurance company executives. The FAIR Plan will insure any home if it's in insurable condition, has not been vacant for more than a year, no illegal activities that take place on the property, and the FAIR Plan will cover your home regardless of the wildfire exposure. So again, that's a pretty big statement. If you think about, you know, even hardening your homes and all the efforts and the properties that you see out there, is the FAIR Plan is the one that's going to step in and write pretty much every home that's out there. And there's definitely people that take a lot of effort and pride to make their house more fire safe, and they educate themselves. And then you've got the lazy neighbor that that isn't doing that, or maybe you back up to you know, commercial land or public land or something that, you know, you can't control. So there's a lot of dynamics involved, but regardless, the FAIR Plan is going to be an open option for you regardless of those circumstances. Just some new enhancements of for the FAIR Plan customers. Now you're able to use secured credit card payment options. So that's really a nice addition, and as well as you can pay through your checking or savings accounts. Another improvement was the dwelling fire policy limits were increased recently from 1.5 million up to 3 million. And just some other sneak peeks at some changes that improvements that you're going to be hearing very soon, announcements on. One is we're going to have more availability of deductible options. So that's just feedback we received from the town hall meetings we attended, and just other customer feedback. Folks and brokers, folks mentioned that they wanted more choices for higher deductibles in some cases. So where you'd see in earthquake and flood policies where you can opt for much higher deductible, we got that information that people wanted those options. So we're definitely going to be implementing that, and you'll be hearing announcements on that soon. And then the other thing, and this is very critical too, is the opportunity to have extended dwelling coverage. So that's something, again, that's not an option in our policy. It takes a little bit more work as it stands, and again, extended dwelling coverage is something that's important for most agents and most customers out there. So I'm really happy to see that being brought to fruition. So we should be hearing about that very soon too. So the FAIR Plan, it can be in part of comprehensive coverage. So basically use the FAIR Plan, which covers the primary coverages there are fire, smoke, and explosion. And you use the DIC policy together, which covers the water damage, theft, and liability. And together that provides the comprehensive coverage. So the FAIR Plan is the way it is today, because that's the way the powers that be that designed the FAIR Plan when it originated. It's filling the need that it was designed to fill, and that's how our products work today. Today, and this trend may have changed, I think, just because of the current circumstances, but 36% of FAIR Plan dwelling policies are in urban markets, and that's the number that's been dwindling, because that was our original need was in urban markets. That in the late 60s, that's where we originally called to action. But today, over 51% of our dwelling policies are rated with a Fireline score of 4 or higher. So it really shows you the shift, and that's probably not a surprise to anybody that's on this webinar today. In the last 12 months, and again, this number's probably still trending north, but the FAIR Plan has grown 56,606 dwelling policies. And again, our goal isn't to grow. I mean, success to us is when we're having attrition and we're losing customers. That's our goal, because it shows the market's been restored.
Okay.
Again, this message has been thrown out there a lot. And it's really important to shop, because one, your home is unique. There's no cookie cutter to say, here's your coverage for your home. Everybody's circumstances and everybody's thoughts and needs do vary, and they're all important, and it's important to have a plan that fits. And both the fair plan is customizable. You can customize the coverages. You can buy it a la carte. You don't need to buy a whole package with the fair plan. You can buy what is important to you, or you can choose to build it out to be comparable to to have both so where it feels like an HO3, where you have the fully loaded DIC policy coupled with the fair plan and matching limits. So again, that's your desire. Sometimes that's dictated to you by your lender or your lender's needs. But again, ultimately, you've got a lot of choices out there. And again, same with the DIC options that are out there. The DIC policies do vary, and some from competitiveness and others from just different requirements they might have or place on you. So in some cases, they require you to buy coverages in some areas or some of the components of the policy that you may or may not need. So again, you're going to get a different school of thought in every proposal you get. So I would encourage you to get at least 10 options, and you're going to get 10 different answers every time. And you want to educate yourself and learn. And just by being here today, that's a great step. But again, ask questions. Don't just assume that the quote you got or the proposal you got is right for you. And a lot of times it can be adjusted. So if you're not comfortable with the way it looks or what it's covering, ask them to increase something or decrease something, or what's the flexibility of it. So those are all sound advice I would give, recommendations I'd give you when you're shopping. And again, I think it's really important, and I'm seeing this more and more in the markets where the agents are all working together. So if there's a particular agent that doesn't have a certain option, he's going to recommend you to go down the road, because given the circumstances, no agents feel good about the cost of insurance for the customers these days. And we really want to see you find a place where you're going to have the right coverage at a price that seems a lot more reasonable for you. So that's really, all I had. I think we hit on the shopping part quite a bit. Do you want to?
So I'm going to go through a few little tips here that on the quality of the coverage and just to build on, we talked here. Thank you so much, Phil and Joel, about shopping options. I know there's a lot of pain points out there around the pricing. When we checked our survey results, people were consistently saying that their premium when they got a renewal quote was triple, quadruple what they've been paying. And, it's obviously for some people, it's a very, very serious financial problem. If you're a limited income household, and you just don't have that kind of disposable income, it's really tough. And I think for some people, I think if you have a mortgage and you end up, if you can't afford to buy insurance on your own, and the lender forced places, and that makes that increases your debt and makes your mortgage have to have a longer payout. That's sort of the one scenario. But obviously, what we want to try to remind people about here is, there's no question that with climate change, the days of paying $1,000 a year for home insurance in California are over. I think, but the idea that it's more like $4,000, $5,000 for a lot of people is unacceptable. Our organization is obviously doing everything we can, along with the other speakers, to fix the situation. But meanwhile, as long as you are paying whatever it is that you are paying, you do, as Joel said, you want to make sure that your coverage, that your dwelling coverage A is enough to replace your home, because as you already heard, and as my organization will tell you, 2/3 of the people that come to our workshops and that we come into contact with after wildfires, and this 2/3 has been consistent for the last 29 years that we've been around, 2/3 of the people do not have enough coverage A, dwelling, that's the lingo for the amount of insurance you have on your dwelling. They don't have enough to put it back the way it was. So there's a very basic way of doing that math. If your agent if you're not working with an agent, you're doing this on your own. You want to ask a local builder what's the per square foot of new construction in your area, and then do some basic math. Take the amount of insurance that's on your home, divide it by the amount of square footage, and then you'll know how much money you would have from your insurance. You want to aim to insure your assets to their replacement cost value. We say 15 minutes isn't enough time to calculate your home's replacement cost, but many agents will try to get you in and out in a pretty quick amount of time, although that's very hard right now. Obviously, why so many people find out the hard way that they were underinsured, it's because it's so rare that your home would burn to the ground and you would need every dime of your insurance. But just remember that oral promises by an insurance representative that you're fully covered are useless if you can't prove them later. So don't be penny wise and pound foolish when you're shopping for insurance, and by letting the agent know that all you care about is the price. It's just not a wise way to protect your asset. And I know it's easy for me to say that, but I think, when people are staring down the barrel of a $4,000 a year premium for their home insurance, the better way to protect your asset is have it insured to value, but carry a higher deductible. Yes, you will have to pay some money out of pocket, but at least you will have that high amount of coverage that you will need. Okay, so a couple more quickies. Basic policies exclude many risks. What are some of the things that you need to pay attention to when you're buying? Try to get replacement coverage over actual cash value. Try to get extended replacement coverage. You heard California law requires private insurers now to give you this bump of an extra extended replacement. The FAIR plan is now going to be doing that as well. Try to get coverage for building code upgrades, so that if you need to make repairs to bring it up to code, you will have that extra pocket of money in the policy. If you have, we talked about having adequate limits on your home. You also want to have adequate limits for your temporary rent. Most people in California today are finding that even that they need a full 36 months, and that is what the law now requires, of ALE coverage, just because it takes that long for a lot of people to get back in their homes. If you have art, jewelry, business property, you want to make sure that you talk to the insurer about that, because a lot of policies have caps. They have caps for watches, collections, money, silver, jewelry, art, guns. And you want to know, and again, you want to know what you've got so that you can make good decisions, right? Whether you want to keep something in a safe deposit box or you're going to keep it in the house, you want to make sure that you're with these special things. Don't assume that they're covered. Talk to your insurer or your agent about it. One last thing, know what's excluded or limited. You heard that the FAIR plan doesn't pay for water damage, doesn't pay for liability, meaning if somebody gets hurt on your property and sues you, the FAIR plan isn't going to give you a lawyer the way a traditional policy would. That's why you got to pair it with a DIC. Okay, tips to save money: raise your deductible, and then try not to pay for coverage that you don't need. If you don't have a whole lot of contents, and you don't need, a lot of insurers will set your contents. That's your stuff, your clothing, furniture, all your possessions. A lot of private insurers will automatically give you a percentage of your dwelling limit for contents. That might be more than you need. So find out if you can reduce the insurance on your contents. Or if you don't have other structures, you don't have any outbuildings, barns, or retaining walls, see if you can get a policy that doesn't automatically include coverage and make you pay for that. And shop patiently. Bundling. This is where you put. You heard Joel talk about trying to make yourself attractive, to the insurance company. One way to do that is to say, okay, I'll put my cars and also in my house with you, or anything else you've got to insure. Typically, that's something, as a consumer advocate, I say, don't assume you're going to get a better deal by doing that. But in today's market, Phil, do you agree with this? That that you're not necessarily going to get a better deal on your auto and your home if you bundle?
It just depends, and that's why you want to shop and look at all the scenarios. But again, with having some of the primary companies that do provide the DIC policy, they're competitive in auto, and their umbrellas, excess liability policies are very affordable too. So it does behoove you. Unfortunately, it's the fair plan is the biggest piece of the premium where you'd like to see a discount, and it wouldn't. So obviously those discounts wouldn't apply there. But looking at your household altogether as an insurance expense, that might be advantageous for you. But you want to look at all the options. Sometimes it is, and sometimes it's not.
Okay. And then, so we say here, is a captive agent finding you the best option or just trying to keep the business? So why do I put that? Let's say I'm a farmer's agent and I don't want to lose you as a customer, but Farmers doesn't want you anymore. They won't insure your home. So I might say to you, rather than saying, sorry, I can't help you, and losing that customer, some agents, and I shouldn't be naming names, but some agents might say, I'll put you with the fair plan. That way I can keep your auto, and I can sell you a DIC policy because Farmers sells DIC. That way they don't lose you. Okay, I understand that. That's why an agent might say or do that. That's why, but that might not be the best deal for you. You might end up paying more by going fair plan DIC with Farmers or with Company F than you would if you shopped patiently and found another option. But again, just get another opinion, because you just don't know until you find out what your options are. We obviously during COVID, with a lot of less driving, some insurers have been giving some rebates or refunds. Now might be a good time to think, if you're trying to find some ways to save money and your household is more strapped. Maybe you're not working right now. Maybe this is a time to reconsider paying for collision or comp. UP offers it on your auto, and UP offers a tip on that. And go to our website and look at that. And raising your deductible on your auto again. So what's going on here? Why is the market in such a bad state? Well, insurers, we have a dilemma, right? We as property owners, what do we want? We want affordable home insurance that will cover all risks. We don't want to have to worry about exclusions. We want help and rewards for making the home improvements that reduce risk. We don't want to go to all this trouble, buying those vents and putting them in, and then have our insurance company still drop us, or charge us the same amount they were going to charge us even though we've invested in these improvements. We want renewals without stress. We want an end to this crisis, right? We want things to go back the way they were. What do insurers want? They want the freedom to choose their customers and their risks. They want to be able to set their rates however they feel is appropriate. If they want to use predictive models, they want to be able to do that. They want to pass along the cost of the reinsurance. That's the insurance they buy on their very high dollar exposure, like above in the millions, right? They want to be able to pass that along to their customers, and they want to be able to control and limit their payouts through exclusions. That's why we're seeing a lot of language about we'll reduce coverage for roof damage and that sort of thing. They don't like mandates. Insurers want to be they are profit-oriented companies. They don't like to be told what to do. They don't want to be told who they can sell to. They don't want to be told that they have to give discounts, and they don't want to be told that they have to offer certain coverages. They really prefer freedom, like most businesses, right? But they also want an end to this crisis. Now, that's about the only place that we are in agreement, both sides. And the reality is, climate change is here, and I don't think anyone can deny that, especially given what has been happening in California. So there's no question that we have to come together, and where we need to come together. comfortable selling in this state. We need a statewide wildfire risk reduction program that insurance companies are required to participate in. And that is part of the solution. I'm not saying that's the only solution, but that is part of it. So we encourage you to communicate with your elected officials and participate in efforts in your community, whether it be through a fire safe council, the Firewise program. There's a huge movement throughout the state of people sort of saying, you know what, we're just gonna have to take matters in our own hands and do everything we can to protect our homes while we solve the insurance crisis. So my organization is rooting for you. I know Phil is rooting for you. The FAIR Plan is rooting for you. They don't want you as a customer. They always say the head of the FAIR Plan, another incredibly hardworking woman, Annalise Javon, tough job she's got. She always says, I live in opposite land. I don't want customers. I don't want people in the FAIR Plan, but we need the FAIR Plan to be there. And so I say good luck to all of you. Hang in there. You've got friends that are working very hard here to help you. And for all of you who wrote questions in, we will work with Phil and Joel to try to get you answers to those questions. And we do appreciate you dialing in and being with us. And if you missed the beginning, you can email info@uphelp.org, that address there, info@. And Carolyn Winter will send you the recording. So again, Joel, thank you. Phil, thank you. And I think we're going to wrap up now, unless there's anything Phil or Joel want to add.
Oh, thank you, Amy. I appreciate being here.
All right. Well, it's been a pleasure. And hopefully, we won't have to do this again. Signing off from the Roadmap to Preparedness, Amy Bach with United Policyholders. Thanks for being with us.
Done.